Okay, I've made you the host, Sandeep, and we are live now. So welcome everybody. Thank you so much for joining us on a Tuesday evening. Great to have you all with us. Pleasure to have Mr. Sandeep Tyagi, who's the founder and CEO of Estee and Gulaq with us. So Sandeep, if you could please share your screen and we can jump into the PPT that we have for the December rebalance update. So guys, for all of you who are new today to our channel and to our webinar, just to inform, just to tell you about Gulaq and about Estee, where we are coming from. So Estee is a quantitative investment management firm, which has been around since 2008, when SEBI had permitted algorithmic trading in India. We have our own portfolio management services for high net worth individuals, and we have been creating leading investment and broking products using analytics and computer science since more than 15 years. So as I mentioned, we have a PMS running for HNIs, and 3 years back, we thought, why not provide this advantage to the retail investors like you and me as well? And that is when Gulaq was born. So as you can see on the screen, we've mentioned some pointers about Estee. We were the NSE Institutional Member of the Year in 2019, and we've served HNIs, have an AUM of over 1,500 crores with us till date. Coming to Gulaq, it is a retail investment advisory arm of Estee, and we create multi-factor portfolios, sector-agnostic portfolios, which are available on Smallcase and PickRight platforms. We had launched in 2020, and we have served more than 10,000 total subscribers from last year till today. Just a little bit about the team. So Sandeep, as you all know, you've heard him in different webinars before, is the founder and CEO of Estee and Gulaq. He's a BTech from IIT Delhi and has pursued his MBA from Columbia Business School. Sandeep brings with him 30 plus years of experience in portfolio management, analytics, and consulting. As regards Vivek Sharma, who's the investments head at Gulaq, you've also heard him speak in a lot of webinars in the past. He's a BTech and MTech from IIT Kharagpur and has 20 plus years of experience in trading portfolio management. To let you know, we are SEBI registered investment advisors, and it's important to educate our clients about all the risks associated with investing in the stock markets. So on the screen, you would see all the disclaimers that you should be aware of, the things that you should keep in mind, that investments in securities markets are subject to market risks, and you should read all the documents carefully before investing, whether you're doing it with Gulaq or with any other investment advisor or intermediary in the market. Rest of the things about Estee, about Gulaq are on the screen for you to view. You can rewind the webinar and have a look at all of these details if needed. So now, Sandeep, I hand it over to you to start the webinar, take them through our agenda for today. And we can also keep taking questions in the middle or towards the end. So guys, please feel free to ask as many questions as you have. Over to you, Sandeep.
Thank you, Eesha. Hello, everyone. It's good to be coming back every month to talk about how our portfolio did, what's been the results, and also share with you where we are going for our portfolio in December. I will be talking both in Hindi and English, and if when you ask question, you would like me to address only in Hindi, please mention in the question itself. I'm happy to do that. अगर किसी को कोई क्वेश्चन पूछना है जो सिर्फ हिंदी में चाहते हैं कि मैं उसका जवाब दूं, तो प्लीज आप क्वेश्चन में ही लिख दीजिए आंसर इन हिंदी, and I'll be happy to do that. Okay, so let's get started. Why Gulaq? Gulaq is a quant-based model portfolio. So we try to build a portfolio which is diversified. We don't not take very concentrated bets. We have about 10 to 20 stocks in which we and macro factors like inflation rate, currency rate, prices of gold, prices of energy, currency exchange rate, so on and so forth. Then we rotate these factors that we have picked, 130 factors, based on what is happening in the economy and what's happening in the recent portfolio. So, जब आप एक portfolio बनाते हैं and you are balancing it across 130 factors, तो आपको हर तरह का एंगल देखने को मिलता है कि ये स्टॉक का मोमेंटम अच्छा है, इस स्टॉक के वैल्यू कैरेक्टरिस्टिक अच्छे हैं, इस स्टॉक में डिविडेंड अच्छा मिल रहा है, इस स्टॉक में कैश बैलेंस अच्छा है। ये सब चीजें देख के हम एक बैलेंस पोर्टफोलियो बना सकते हैं। नाउ टू डू दिस 15 साल का हिस्टोरिकल डेटा हम कंटिन्यूअसली इवेल्युएट करते हैं। सिंस अबाउट 2008 हम हमारे पास सब डिटेल डेटा है जो हम कंटिन्यूअसली इवेल्युएट करते हैं कि कोई भी मैकेनिक्स किस तरह से पोर्टफोलियो बनाया जाए, किस तरह से बैलेंस किया जाए, उसको टेस्ट किया जाता है लगभग 15 साल के डेटा के ऊपर। गुड थिंग अबाउट क्वांट इन्वेस्टिंग इज ये कभी ना ग्रीडी होता है ना अफ्रेड होता है। सो वी आर नेवर ट्राइंग टू say, oh, the market is so good, results are in, political stability is going to be there, the markets are going to be up 2, 3, 4%, or fearful when the markets are going down. We don't run away. We are consistent in our approach in all scenarios. Now, the combination of factors is in many dimensions. So on the left side, you see a picture. जो पहला bucket है, those are the types of factors which are called fundamental or return investment factors, like momentum. A lot of people do momentum investing. That's a big factor. Value, meaning is the PE high or low? And there are many other metrics for value. Low volatility, is it a stable stock? Will it produce return month after month after month, like Colgate Palmolive? Or it is very volatile? Some of the real estate stocks can be good, but they're very volatile. Then you look at it by large cap, mid cap, small cap, because it's well known that small caps can perform well, but they are also more risky, so you have to adjust for that. Then you have the sectoral view, meaning is it FMCG company, IT company, utility company, or healthcare company, and what is happening in that industry. So we not only allocate based on an individual company, but also what type of sector do they represent. Now, let's look at some of the allocations by these factors. Here is market cap wise allocation. Now, I think my picture is coming right here, so let me move this. In December, we had 20% to large cap, 60% to mid cap, and 19% to small cap, which is roughly the same as it was in November. But as you can see from a recent past, if we go back to say something like March of last year, or that's probably the peak I see here, 63% was in large cap, and 29% was in mid cap, 7% was in small cap. Now it has changed quite a bit. We are moving downstream. So we are coming from large cap to mid cap and small cap, because large caps had done very well in 2022 coming into 2023, but then the mid caps and small caps have really rallied in the recent past. So we have had to adjust our portfolio weights to reflect what the environment is. This type of environment is called risk on. That means investors are bullish. वो लोग ज्यादा बेट्स ले रहे हैं. जब वो ज्यादा बेट लेते हैं तो छोटी कंपनियां जो हैं वो typically do better. So you have to adjust your portfolio for that kind of a market environment. Let's go and look at what's happening to sector allocations. Now, as you can see on the left side, it's the same data as on the right side. It's just in a graph versus numbers. So if you look at it, some of the big allocations that we have right now are to information technology. They are to consumer staple. These are the two biggest ones that we have right now. Some where we have no allocation is real estate, materials. And if you look at some changes that are happening, the financials are going down from about 33% down to only about 16%. And financials usually have been small in the past. In the last month, we saw a bunch of growth, but we have brought it down again this time. Now, this is, I guess, the same data in terms of what changes are happening month to month. So as I mentioned already, consumer staples is going up, financials is going down. Those are the two biggest changes that we have here. Let's talk about some of the specific stocks that we are putting in there. So Ircon, Sonata Software, Colgate Palmolive, NTPC are some of the companies that are coming into the portfolio. Chalet Hotels, Zenzar Technologies, Angel One, and Rail Vikas Nigam, some of the companies that are going out of the portfolio in this month's rebalance. Now, we don't normally go into individual company. As we have talked many times, we have many factors that we look at. So it's difficult to say, why is it going in? Why is it coming out? It's a blend of all the different factors that we are looking at. Now, one question we always get, so might as well put it out there, is the market overvalued? Is the market gone up very high? This metric that we are showing on this page is a relative price to earning valuation. क्या मतलब है इसका मतलब यह है कि अभी मार्केट की जो अर्निंग कैपेसिटी है, how is it relative to the price that we are paying for that earning capacity, and how is it relative to that ratio in the past 3 rolling years. So जब आप Nifty 50 को देखते हैं, which are the large cap stocks, they are at about 42% PE, which means कि पिछले 3 साल में more than half the time इससे ज्यादा price to earning ratio थी जितनी अब है. However, in small cap, that ratio is almost 80%. That means small caps are getting quite expensive, but large caps are not that expensive. They are less than half of what they have been in the last 3 years. So as we build the portfolio, we keep an eye on it, we keep monitoring it. और हम लोग हमेशा यही कहते हैं कि it's very difficult to time the market. It's important to have the right asset allocation. हमारे गुल्लक gears जो हैं, which help you decide what allocation you should have. पर जब आप एक allocation decide कर लेते हैं, then you stick with it. You don't try to time कि अभी expensive हो गया तो कम कर दो, अभी cheap हो गया तो बढ़ा दो, because that's very difficult, if not impossible to predict. That's it. That's the quick 16-17 minute update for everyone. Happy to start taking questions, and I'll be happy to address anything that you want to talk about.
Sure. Thanks a lot, Sandeep. We do have quite a few questions coming in. So I think firstly, a couple of people have requested us to talk in Hindi. So sure, we can take some of the questions in Hindi. Happy to. Okay. So Inder is asking, just wanted to ask, as the market is at highs, how would Gulaq 6 work when the market is in downtrend? Already subscribed? Sorry, yeah, Sandeep. He was just saying that he's already subscribed, but he's not investing more. He needs clarity on this aspect.
Yes. So Gulaq 6 जो है, ये हिंदी है, English है? You gotta tell me.
English. He's asking in English. So.
Okay. So Gear 6 is a 100% equity exposure product. That means whether the market is high or it is low, we are going to be 100% recommending that you go into equities. Is that the right decision for you or not? Depends on your situation. So आप लोग एक risk survey लिख सकते हैं, which is on Gulaq's website. आपकी एज कितनी है, सेविंग्स कितनी है, कितनी स्टेबल जॉब है, आपके ऊपर कितनी रिस्पॉन्सिबिलिटीज हैं फाइनेंशियल, इन सबको when you combine all of this information, then you get what is your right asset allocation. Right asset allocation for young people who are earning more than that their expenses are is to be in equities, because over 30-40 years you will definitely make more money in equities than in fixed income. So if you are going to be in equities, you stay through the downturns and the upturns, because downturns come and then upturns come as well. If I show you when there is downturn, for example, this is some data. In 2022, there was quite a bit of downturn from a high. From a high in April down to June, July, we lost almost 20% of our portfolio value. But if you look within next 2 months or so, it recovered also. So you don't panic. You know, that is one thing that you should always have the mental stability to go through the ups and downs of the market. If you're going to invest in stock market, please know stock markets correct 20, 30, 40, even 45% from their peaks. That is part of what you are getting into. If you imagine that somebody can completely avoid it and still invest in stock market, it's not possible. The stock market has that characteristic, because a lot of people are expressing opinion, it will go up and down. So that's how we have behaved in the past. If I show you the track record, you see that same period, April 22 to June 22, see how it came down or 20%, and then it recovered very quickly in 2 months as well. If you try to time the market, it is possible that you may sell in May because you said, oh, bahut gir gaya. So April, it starts falling. May, you panic, you sell, and then you were waiting, and then by August, when you decide, okay, time to invest again, it's already gone up, fully recovered, and you never make up that loss that you did in April. So our recommendation would be, do your regular savings, keep selling, and keep the asset allocation constant. So if your asset allocation is 80% equities, 20% fixed income, and the stock market has gone up a lot in the last 7, 8, 10 months, then the thing to do is sell a little bit of equity allocation, put it in fixed income, bring it back to 80-20, but then stick with it. That's all you need to do.
Perfect. That's very insightful, Sandeep. I think a question on similar lines, Rustam पूछ रहे हैं that I'm worried about timing of subscription. I've invested approximately 50% of total amount which I want to invest. Is this the right time to invest more?
I think I just addressed this
20
whole question.
Yeah.
Get your asset allocation right. Once you have your asset allocation, get in the market. There is the question is, if you have the rest of the money, what is it doing? If you have kept it in the bank, you have made a fixed income allocation. It's not like you are not doing anything. You have the money, you have put it in your bank account. So you're making savings account return on it. That's a fixed income, actually less than fixed income return.
Exactly.
That's not optimal. If your risk allocation is high, then you have to be in the market. If your risk allocation needs you to be in fixed income, then stay there. But this change of when to go in is not the right way to think about investments.
Right. I think Sunil Meal, your question, आपका question भी आंसर हो चुका है. आपने पूछा है कि आप हर महीने 40,000 इन्वेस्ट कर सकते हैं, तो करना चाहिए गुल्लक गियर 6 में या नहीं. आई थिंक जैसा संदीप ने बताया वैसे ही बात है कि आप अपना रिस्क सर्वे लीजिए. Gulaq.com पे रिस्क सर्वे है, वहां पे आप देख सकते हैं कि अपने डिफरेंट पैरामीटर्स की आपकी इनकम कितनी है, आपकी लाइबिलिटीज कितनी है, आपको नॉलेज कितनी है मार्केट्स की, बहुत सारे क्वेश्चंस हैं जिसके बेसिस पे आपको पता चलेगा आपका रिस्क एपेटाइट या आपकी रिस्क टेकिंग एबिलिटी है. उसके हिसाब से आपको पता चलेगा कि आप कहाँ लाए करते हैं. अगर आप ज्यादा रिस्क अग्रेसिव हैं, अगर आप रिस्क ज्यादा ले सकते हैं, तो आप पूरा 40,000, अगर आपका एक्स्ट्रा मनी बचता है अपने लाइबिलिटीज को मीट करके, तो पूरा 40,000 आप डाल सकते हैं इक्विटी में. गुल्लक गियर 6 इज 100% इक्विटी. अगर थोड़ा डेट कॉम्पोनेंट, अगर ऐसा लगता है कि आपकी रिस्क एपेटाइट, रिस्क लेने की एबिलिटी थोड़ी कम है, तो आप थोड़ा किसी डेट प्रोडक्ट में भी डाल सकते हैं. एंड संदीप, इफ यू वांट टू ऐड इस पे कुछ और.
नहीं, बिल्कुल सही बोला आपने. तो जो आपकी सेविंग्स है हर महीने की, वो उसी रेशियो में आप एलोकेट करेंगे जो आपका एसेट एलोकेशन है. ये सवाल हम बार बार आपको सबको समझाते हैं कि आपके मन में एक एसेट एलोकेशन होना चाहिए कि मेरा इतना पैसा इक्विटीज में जाएगा, इतना पैसा फिक्स इनकम में जाएगा. हमारे सिर्फ गुल्लक गियर 6 नहीं है, हालांकि गुल्लक गियर 6 सबसे ज्यादा पॉपुलर है, पर गुल्लक गियर 5, 4, 3, 2 वो सब भी हैं. क्यों है? क्योंकि गुल्लक गियर 4 ऑटोमेटिकली 60% इक्विटी में रखता है, 40% जो है वो फिक्स इनकम ईटीएफ्स में रखता है. जब आप इस तरह का एक कॉम्बिनेशन बना लेंगे, तो आपको फिर सोचने की जरूरत नहीं, चाहे मार्केट ऊपर जा रहा है चाहे नीचे जा रहा है, वो अपने आप एडजस्ट करता रहेगा कि कितनी क्वांटिटी जो है आपकी इक्विटी में होनी चाहिए, कितनी आपकी फिक्स इनकम में होनी चाहिए. अपने आप एडजस्ट करेगा, वो आपको करने की जरूरत नहीं है. अगर आप अपने आप करना चाहते हैं और सिर्फ हमारा इक्विटी प्रोडक्ट यूज करना चाहते हैं जो है गुल्लक गियर 6, तो फिर आपको सोचना पड़ेगा कि अगर मैं 40,000 और इन्वेस्ट कर रहा हूं और मेरी एलोकेशन 80 और 20 है, तो 32,000 गियर 6 में डालिए और 20% एफडी में डालिए या भारत बॉन्ड खरीदिए या जो भी ऐसी कोई चीज है जिससे आप फिक्स इनकम ले सकते हैं, उसमें डालिए.
Perfect. Now, Dinesh Naik is asking, is it good to sync rebalance and SIP date? I think I can provide some inputs here, Dinesh. स्मॉल केस पे अभी होता ये है कि अगर आप आज रीबैलेंस कर रहे हैं और आप सेम डे पे SIP कर रहे हैं, तो कुछ स्टॉक्स जो आपने सेल करे हैं वो फिर से परचेज करा देगा, जिसकी वजह से इंट्रा डे ट्रेडिंग पे जो टैक्सेस लगते हैं वो एप्लीकेबल हो जाएंगे. while we have written to Smallcase, we have discussed with them to provide some functionality around it and provide a workaround around it. We would suggest कि आप एक दिन रुक के next day अपना SIP कीजिए. So SIP भी manual है, you will have to add money. अगर आपको additional money add करना है, आप same day पे ना करिए. Rebalance अगर first को हो रहा है किसी महीने, second को आप SIP amount add करके invest more कर सकते हैं. Then Dhyaneshwar is asking if we have taken Gulaq Year 6 subscription but want to change to Gulaq Year 5, can we shift in between the subscription period, not after 6 months? How it will work on the portfolio allocation side?
So, इसमें कुछ थोड़ा सा टेक्निकल एस्पेक्ट है कि स्मॉल केस में किस या पिक राइट जहाँ पे भी आप कर रहे हैं वहाँ पे वो कैसे अलाउ करते हैं, which maybe Eesha you should answer. But from an allocation perspective, when you get the new portfolio, you will be able to see that. I don't think they have the functionality to go across gears right now. So it'll end up, kind of either being a manual adjustment that you might have to do. We are happy to help you. अगर आप हमें ईमेल या वो करें तो हम आपको एक कैलकुलेशन करके दे सकते हैं कि आप क्या बेचें और क्या खरीदें, and then you can be on the new subscription. पर वो लोग कैसे चार्ज करते हैं अपने प्लेटफॉर्म पे, that I'm not able to answer for you. Isha, if you know the answer, you should add.
Yeah, sure, Sandeep. So, Dhyaneshwar, it's from a small case platform perspective, it's not possible to shift between two portfolios for any advisor, not only for Gulaq. So, वो थोड़ा difficult हो जाएगा, but if you really want to do it and if you want to take our help, happy to help. Just write an email to our support@Gulaq email ID, and we will get in touch with you. But वैसे देखा जाए तो this functionality is not present कि आप portfolios के बीच में switch कर पाए, small case और pick right दोनों पे ही. Okay, Khalil is asking how much maximum one can invest in Gear 6.
Gear 6 has a tremendous capacity of, there is no real limit per se. There is a minimum. You cannot invest less than 25,000. And typically, if you invest about a lakh, then you're gonna get full portfolio. As you go above 50 lakhs, then the right portfolio for you may be the PMS product. PMS product is called Long Alpha, and it's a more diversified product. Small case Gear 6 has about 10 to 20 stocks, whereas Long Alpha PMS, because the amount of money is larger, has about 60 to 70 stocks. So we build a more diversified portfolio, which reduces the risk, improves the chances of having good performance. Even though in the recent past, concentrated portfolio in small case has done very well, but because smaller number of shares, it has some risk, which can be mitigated जैसे आप एक portfolio बड़ा बनाते हैं. So that's, I guess, the answer. So the boundaries would be, say, 25,000 to start with Gear 6. Above 50 lakh is PMS product. Between 1 to there used to be a PMS wealth or Gulaq wealth portfolio, which allowed you to do some higher than that. I'm not sure if it's still alive, Eesha. Do you know if it's still alive?
No, Sandeep. Right now we've not made it alive. Yeah, it's hidden.
Okay, so it's really 25,000 to 50 lakhs is Gear 6 or any of the gears. And then above that is our recommendation would be PMS.
Okay, Manjunath is asking if we have a target alpha that we want to generate through Gear 6.
Yes, we expect that the kind of math that we do should produce somewhere around 5% alpha over index. We have produced much larger than that, about 4 times that number. So we have been producing about 22% alpha, and that's why investors really like it. But that's not a realistic expectation long term. The markets have worked in a way that it has been possible to generate this. But long term, you can't expect that kind of an outperformance to happen. Competition will increase, more people will understand how to invest properly. So this returns will converge. In developed markets, alpha over index is very difficult to create. So you end up having zero alpha. That is why people do only index investing in developed markets, or maybe 1%, 2%. But in emerging market like India, with so much flow coming in, our expectation based on our analysis and backtest would be about 5% we should be able to generate for near future. That would be our expectation. Obviously, I have to give you the disclaimer, cannot be guaranteed, and nobody can predict exactly what will be higher or lower.
Right, right. Yeah, and like for other people who might not be aware of alpha, alpha is the profit that we make on top of profit or loss. So it's basically the returns that we generate more than the index. So that's what Sandeep is talking about. Whereas total returns जो हमारे हैं वो और ज्यादा हो सकते हैं, but alpha is कि अगर index ने 10% return दिया है एक पीरियड में, तो हमने उसके ऊपर कितना, अगर हमने 15 दिया है तो 5, which is 15 minus 10 is the alpha, and हम यहाँ पे उसकी बात कर रहे हैं. Okay, so two questions, Sandeep, which are very similar. Just a second, I think I lost them. Yeah. So Nitish and Yogiraj. Nitish is saying whenever there is a rebalance, stocks are already up by a few percentage points. I've been investing through SIP each month. How much tracking error should I assume looking at portfolio returns of 60% CAGR in the last 3+ years? And Yogiraj has a similar question, that stocks are trading at a premium of 2 to 5% on the day of rebalance itself. So how do I avoid slippage?
Yes, very good questions, both of them. Slippage and execution implementation is a tough thing. Given the structure of the product, I think it makes it a little difficult to exactly help our investors with that, because we are not doing the execution. You're doing the execution, which of course in PMS, we take the responsibility, we make sure how we do it. There is no other way than to kind of, I guess, if you spread out your orders over some period of time, 1 hour, 2 hours, somehow you could manage that, then your slippage will be lower. So if you did it close to the time when we give you the rebalance, and you did it over a slight period, then the impact will be less. But if everybody is trying to do it at the same time and they're putting the orders straight away and hitting market, there will be impact, unfortunately, which cannot be controlled. And in some sense, doing it a little later might save you that impact. So if you are that aware that you are able to see that the stock has already moved 1 or 2%, maybe just wait half an hour, 45 minutes, 1 hour, because the market adjustments will happen, and any price demand that's happening, if a lot of people are doing orders at right that instant, then there will be something, and then it'll adjust. So delay and small step execution, not hitting market orders, but doing limit orders to some extent, all these strategies can help. But it's very difficult to do it in an individual without automation, without using computers. So yeah, I guess that's the challenge of implementing these model portfolios.
Right, right. And Smallcase will make people place only market orders. So they'll do it all together in one go at one click of a button.
And yeah, and again, I would urge, if you are seeing 2%, 5% slippage, that's a lot. I mean, we can't generate that kind of alpha, so you will never make the returns. So if you are seeing that, I would urge you to maybe get in touch with us, share what you did. We will work with you to help you understand how we can make it better. I can tell you that when we implement our model portfolios in PMS products or anywhere else using our own execution algorithms, our slippage does not exceed more than 0.1%. So we tend to get our slippage to be under 0.1%, and sometimes it's 0, or sometimes it's even better, because we execute using algorithms, watching the markets very closely and quoting into the market. So, but unfortunately, we can't do that for retail investors, given the structure.
Okay, moving on. Vishal is asking, last few times after rebalance, it suggests stocks which was sold in next SIP. Yeah, Vishal, I think I addressed your question earlier. Someone else was asking the same. तो आपको SIP next day आप रखिए SIP, सेम डे पे मत कीजिए वरना यही प्रॉब्लम हो सकती है. इसके अराउंड एक सोल्यूशन हम डेवलप कर रहे हैं स्मॉल केस के साथ, हमने उनसे बात करी है. बट टिल द टाइम दैट हैपेंस, ताकि आप पे इंट्राडे टैक्सेस ना लगने लगे, आप अपना SIP नेक्स्ट डे पे कीजिए. Rajneeshan is saying कि your report carries sell for 4 stocks while implementation and execution is resulting in 6. So Rajneeshan, जो अभी संदीप ने दिखाए थे stocks buy and sell, ये हमारा पूरा portfolio नहीं हम बता रहे हैं. These are just examples of the kind of the stocks that we are buying or selling in this particular rebalance for this month. ये पूरा आपको list हम नहीं share कर रहे हैं. So what you see, if you've already subscribed and what you are seeing on the platform is correct. You don't have to worry. Rohit is saying, I want to invest lump sum more. So the right time to do the lump sum, I think Rohit Sandeep again in the beginning, when we started with the Q&A, he addressed your question. Request you to rewind and go to the start of the Q&A. Avya Sharma, can you please share some data related to factors being used in current portfolios?
Sure, we don't really discuss a lot about individual portfolio factors that are working right now. We believe that is part of what our methodology is all about. But to give you some sense, as I mentioned in this chart, these are some of the examples. So when we are looking at momentum, for example, we may look at a factor which says what is the 6-month price momentum. We may look at that price momentum adjusted for volatility. There is something called Hurst coefficient. So there are many ways of calculating momentum, anywhere from 1 month, 6 months, 12 months, adjusted for volatility, adjusted for stability of what the momentum is. So those would be the ideas in types of what we do at when we look at momentum. We may look at also earnings momentum, not just price momentum. So momentum can be looked at in many different ways. Same thing with value. A lot of people think just price to earning is the value, or earning to price is the only metric of value. But that's not the case. We look at, how is it price to book? How is price to sales? What is happening in terms of their cash flow availability? So there are lots of ways of looking at value as well. All of these factors are called fundamental or dynamic factors that we are looking at. Then we have sectoral analysis. Which sector in aggregate has done well? That's a factor in itself. We have index participation. So as you must have heard that a lot of investment is done directly in the index. So we look at which stocks are in which indices. Are they part of NSE 50, Nifty 50? Are they part of Sensex? Are they part of MSCI, Emerging Market Index? Having all these memberships creates a demand for a particular stock and therefore helps increase its price. So we pay attention to that. We also look at what is their technical indicators. What are technical indicators? How much call option volume is there? How much put option volume is there? What is happening to the demand and supply book? Meaning how many ask bids are there? How many bid quotes are there in the market on average? These indicators tell us, is there more demand for sellers or more demand for buyers? These kind of technical indicators are included in our analysis as well.
Thank you so much, Sandeep. Rishabh is asking, he's requesting us to answer in Hindi, and he's asking that he can take high risk, but the stocks should not be like Yes Bank, DHFL, etc. It should protect at least capital in the long term. I subscribed it in November and would heavily invested in Gulaq 6. I'm not very sure of the question, but yeah, Sandeep, if you could share.
So क्या नाम है?
ऋषभ रिक्वेस्ट कर
जब
रहे हैं कि हम हिंदी में
हाँ,
रिस्पॉन्ड करें.
हम जब आप हमारा पोर्टफोलियो देखते हैं तो आप अगर इंडिविजुअल स्टॉक्स को देखेंगे तो ये उसको एक्सप्लेन करना थोड़ा सा इतना आसान नहीं है. वजह ये है कि जो पोर्टफोलियो बनाने का तरीका है वो पूरा पोर्टफोलियो इकट्ठा बनाता है. जब हम कंपनियां सेलेक्ट करते हैं तो हम इस तरह से सेलेक्ट करते हैं कि वो एक दूसरे के साथ ओवरऑल रिटर्न एक अच्छे नंबर पे जाके देंगे। उसके अंदर ये हो सकता है कि मे बी यस बैंक के, आई डोंट नो यस बैंक है कि नहीं पोर्टफोलियो, मैंने इतना डिटेल में नहीं देखा है ये महीने का पोर्टफोलियो, पर जो भी बैंक हमने या फाइनेंशियल इंस्टीट्यूशन उस वक्त हम चुन रहे हैं, वो इस वजह से भी हो सकती है कि हमें लगता है कि भाई फाइनेंस सेक्टर में इस वक्त हमें थोड़ा वेट देना चाहिए, और इस वजह से भी हो सकती है कि वो पर्टिकुलर स्टॉक बहुत अच्छा कर रहा है, और इस वजह से भी हो सकती है कि वो स्टॉक जब किसी और कंपनी के साथ कंबाइन किया जाता है तो उन दोनों का मिलके रिटर्न अच्छा आता है, क्योंकि जब इसका रिटर्न ज्यादा आता है तो उसका रिटर्न थोड़ा कम हो सकता है, या इसका रिटर्न कम हो तो दूसरे का रिटर्न ज्यादा हो सकता है। इसको बोलते हैं कोरिलेशन। तो जब हम एक पोर्टफोलियो बनाते हैं हम इन सब चीजों पे ध्यान देते हैं। तो अगर आप कोई एक स्टॉक देखेंगे कि भाई इसमें DHFL क्यों है, इसमें यस बैंक क्यों है, तो हम उसका आपको जवाब नहीं दे पाएंगे, क्योंकि हमारे हिसाब से जब हम पूरा पोर्टफोलियो बना के रखते हैं तो वो एक बैलेंस डाइवर्सिफाइड पोर्टफोलियो होता है जो उसके ऊपर काम कर सकता है। नाउ अगर आपका अपना व्यू है तो मॉडल पोर्टफोलियो में ये बेनिफिट तो है ही है कि आप सेलेक्ट कर सकते हैं कि भाई मुझे ये वाला स्टॉक नहीं लेना है, उसको अनसेलेक्ट कर दीजिए, बाकी स्टॉक में इन्वेस्ट कर लीजिए। पर फिर आप जो है वो गियर 6 एग्जैक्टली में इन्वेस्ट नहीं कर रहे हैं, आप अपना उसके ऊपर ओवरले कर रहे हैं, मतलब आप अपना जो भी आपका एक विचार है, ख्याल है, वो आप उसके ऊपर लगा रहे हैं। उसका बेसिस क्या है, आपके पास का कोई खास इंफॉर्मेशन है, आपके पास कोई खास बिलीफ है कि ये अच्छा है या बुरा है, उसके ऊपर आप सोच सकते हैं। हम लोग जब एक पोर्टफोलियो बनाते हैं तो जो भी 130 फैक्टर हैं उन सबको कंबाइन करके देखते हैं कि क्या पोर्टफोलियो हम बना सकते हैं। सो शॉर्ट आंसर है कि मैं आपको ये वादा तो नहीं कर सकता हूँ कि उसमें यस बैंक या DHFL नहीं होगा, क्योंकि दे आर पार्ट ऑफ द यूनिवर्स, और जब हम उसको स्कोर करेंगे तो वो पूरे पोर्टफोलियो में कैसा काम कर रहे हैं वो सब मिलके देखा जा सकता
Perfect. Thanks, Sandeep, for the detailed answer. नाउ रजनीशन हमसे पूछ रहे हैं, आई थिंक सिमिलर स्टेटमेंट, कि हमने 4 स्टॉक्स बाय एंड 4 स्टॉक सेल दिखाए हैं, हाउ द सब्सक्रिप्शन टू योर स्मॉल केस इज बेनिफिशियल व्हेन यू रिवील ऑल द हैपनिंग्स।
है। ये पूरी कहानी नहीं है, ये सिर्फ ट्रेलर है। सो यू आर राइट, थोड़ा बहुत ट्रेलर हम आपको दिखाते हैं कि क्या मोटा मोटा खरीदा जा रहा है, क्या बेचा जा रहा है, ताकि कुछ डिस्कशन हो सके। पर ऑब्वियसली पूरा पोर्टफोलियो वेट्स कितना खरीद रहे हैं, कितना बेच रहे हैं, वो सब इंफॉर्मेशन इसमें नहीं है।
क्वेश्चन, रीजन फॉर आस्किंग कोलगेट पाम ऑलिव, ब्लेस एंड जेकब। I think we do not comment on individual stocks. Like Sandeep has mentioned in the previous webinars also, it's a model portfolio. We have an algorithm that considers numerous factors, 130 plus factors, and it gives the output based on the factors considered. So we can't really comment on one particular stock कि ये stock अच्छा क्यों है, इस reason की वजह से. Also एक portfolio level पे सारे stocks को analyze किया जाता है. Sandeep, any other things you want to add?
नो, आई मीन बता हम सकते हैं, पर आपको उसको एब्जॉर्ब करना थोड़ा मुश्किल हो जाएगा, क्योंकि हम आपको अगर इंडिविजुअल स्टॉक बता भी दें कि इस स्टॉक का ये जी स्कोर है इस फैक्टर पे, तो 130 नंबर आपके सामने रख देंगे, पर उससे आपको क्या इंफॉर्मेशन मिलेगी ये मुझे क्लियर नहीं है, इसलिए हम उस डिस्कशन में जाते नहीं है। ये क्वांट मेथड का मेथड अलग होता है। जैसे फंडामेंटल इन्वेस्टर्स हैं, वो लोग एक हाइपोथेसिस लेके चलते हैं कि ये अलग होने वाला है। मान लीजिए उन्होंने नया प्रोडक्ट लॉन्च किया है या कोई मार्केटिंग कैंपेन की है, नहीं तो BCCI के साथ पार्टनरशिप की है, तो उनका कोई हाइपोथेसिस रहता है कि इसकी वजह से मार्केट इसको अच्छा ट्रीट करेगा। हम लोगों के साथ ऐसा नहीं है, हम सब हिस्टोरिकल डेटा देख के चलते हैं कि क्या उनका फाइनेंशियल इंफॉर्मेशन आया है, मार्केट में क्या उनका प्राइस चल रहा है, क्या फैक्टर्स चल रहे हैं, उसके ऊपर डिसाइड करते हैं। जो भी इंफॉर्मेशन कंप्यूटर एब्जॉर्ब कर सकता है, तो वो बहुत सारे फैक्टर्स होते हैं, और उन सबको जब कंबाइन किया जाता है थोड़ा 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 थोड़ा, तो नेट रिजल्ट निकल के आता है। तो उसको डिसएग्रीगेट करके कोई फायदा होता नहीं है, कुछ समझ उसमें ज्यादा आता नहीं है। पर जब उस चीज को आप सिस्टमैटिकली टेस्ट करते हैं ओवर 15-20 साल के डेटा के ऊपर, तब आपको कॉन्फिडेंस आता है कि हाँ, अगर ये चीज इस तरह से निकल रही है तो इसमें कोई हिस्टोरिकल बेसिस है कहने का कि ये पोर्टफोलियो अच्छा काम करे।
Okay, I think Kaushik wants some insights into our portfolio creation and the factors, because he's asking how do we analyze currency exchange rates, index PE, and global derivatives and commodities behavior in a specific time period of a market and then make changes in rebalancing every month.
हाँ, so मैंने जैसे थोड़ा सा डिस्कस किया था कि there are macro factors. I'm assuming this is English or Hindi.
English, Sandeep is asking English.
There are macro factors. We look at 18 of them. Currency is definitely one of the macro factors we look at. So when you look at a macro factor along with the currency, inflation, gold, energy, all of these S&P price movement, all of these factors as macro environment. Then you say what types of companies do well in what type of macro environment. Simplistically, आप ऐसे समझिए, we are regressing each of our factors, each of our companies on these macro 18 factors and combining that together. How attractive would this investment be in different macro environment, especially the macro environment right now? That gives us a macro kind of a adjustment score for each investment that we have. So some companies will get amplified, that they will get more weight than they were getting without macro adjustment. Some will get reduced. So that gives us a way to adjust our portfolio to the macro environment.
Okay. Now, a question on similar lines. Lavan Sagar is asking if we have any plans to increase allocation to large caps, keeping the PE ratio in mind.
Yes, so that's a very good question. We have ourselves been noticing that small cap is becoming very expensive, but we do still have significant allocation to small cap in our portfolio. More of it is in mid cap right now. If you look at our allocation, 19%, which is high, but not as high as it was in October and even January of last year. So right now, most of our allocation is in mid cap. I agree with you. Looking at just that information, I would also expect that some allocation will start moving to large cap. But when you combine value, there are other factors. You know, if you look at momentum, that would probably support a larger allocation to mid cap right now, lesser to large cap. So it depends what is the balance of these portfolios, and that's where we are coming up. But we are definitely watching. And when we have a hypothesis like this, we go back and test how can we adjust our portfolio factors so that what our intuition is telling us should be happening starts happening in the portfolio. And also, would that have been beneficial if I test it over the wall of history that I have? So ऐसा तो नहीं है कि पहली बारी large cap or small cap में price difference आ रहा है. It has happened earlier as well. So we would test how to adjust systematically when something like this happens. So this is one of the questions our research team is investigating right now. And maybe as we evolve and make it better, you know, some adjustments will happen. But good question and something that we are also addressing in our research right now.
Right. A couple of questions that repeat every month, Sandeep. Maybe we can just quickly answer them for the benefit of new people who join. Bala Chandar is asking which is better, SIP every month or lump sum at a time. And he's also saying that most are Hindi, but I am a non-Hindi fan of Estee Smallcase. So sure, we are happy to answer in both languages.
I know 3 languages, Hindi, English, and Punjabi. I'm happy to answer in any of the 3. And we are trying to produce content in Marathi, Gujarati, and Kannada as well. So, but I personally don't know those languages. So we will try to keep addressing questions in whatever is comfortable for people. Sorry, coming back to the question of lump sum versus a single investment. We have done a lot of analysis on this. The answer usually comes back that if the question really to ask is, where are you putting that money if you're not putting in the investment? Because when you say, should I invest or not invest, there is no such thing as invest or not invest. It's invest where. Because when you are not investing in equities, you are investing it in fixed income or you are investing it in cash. So you are always investing, but you are just investing and keeping it in one asset or the other. So the question you got to be asking is, why should my asset allocation be different month to month? Why is it I got a bonus of 2 lakh rupees and my saving was, let's say, 10 lakh? I don't know what the numbers are, but suddenly I used to be 80% equity person. So 8 lakh was in equity, 2 lakh was in my fixed deposit. I got a 2 lakh bonus. I haven't invested. So I have kept it in cash. So now I have 4 lakh in cash or fixed income and 8 lakhs in equities. So my allocation has gone 66-33 suddenly. Why? Do you think that this month is somehow different than the previous information? You don't have that information. So this kind of thinking is something we have to get away from. You have to fix your allocation in your mind and stay with it. I think I've addressed it 5 times, so I hopefully everybody knows my view on this clearly.
Right. And the Bala also was one aspect is SIP versus lump sum. So I believe you're saying that as soon as you get the money, if you get a lump sum amount, you put it in. Now, where allocation is something you need to decide. If it's if you get it on a regular basis, you have a regular stream of income, then you do the SIP every month, again keeping the asset allocation in mind.
Yes.
So
the only time when SIP is beneficial, I mean, 2 times. One is when your savings are coming month on month. Let's say every month you get your salary and you save some part of it. Then, of course, you're going to do SIP. You're not going to hold on to it for a year and then put lump sum. The second reason for doing smaller investment rather than lump sum is when you're trying out a product. Let's say you get somebody who says, I've got a great product, and you don't really fully understand how it works, how will it get implemented, what would be implementation challenges or execution. Then you do small investments, build it up so that you have a better understanding. But once you are comfortable that this is an allocation you are going to do, then there is no need to hold back. Then you do whatever your investments are in the right proportion for every piece of money that you get.
Perfect. So Richel is asking how much of one's portfolio should be with one manager, be it Estee or any other.
Yes. So this risk is called manager risk. No matter how good the manager is, we would never recommend that you put all your eggs in one source of alpha, one view of alpha. So depending on your portfolio size, because the smaller the portfolio, difficult it is to split it in multiple chunks. But if your portfolio is large enough that you can meet the minimum of the investment source or manager, then maybe 3 is a good number to split your money for a particular type of investment. There's no scientific basis to say what it is. Diversification is good. Too much diversification is not necessary, it's just a hassle. And too much concentration is not good, because then you have some risk that you're carrying. With something goes wrong with their process, with their data, with their operations, anything, then you have that risk.
Right. Okay, moving on. Lokshdeepa is saying, if I have to invest 50 lakhs for equity exposure, is it better to invest in Gear 6 or PMS from cost and return perspective?
Yeah. So, Deepa, the implementation cost in PMS is based on, we have different fee plans. You can have a fixed fee plan, you can have a variable fee plan. You have more options than we have in Gulaq portfolio. The second benefit for you is going to be the implementation slippage that we were talking about. In PMS, we take the responsibility of implementing it. So our slippage to our model will be somewhere around 0.1% every time we rebalance. Whereas in Gulaq, your slippage could be more or less depending on who's your broker, what are your transaction charges, what's happening. All of that has to be factored in. So return-wise, I can tell you Gulaq Gear 6 has actually done better in last 3 years than our long alpha product. But looking at long periods of time, we believe that the more diversified, more stable product will be long alpha, because it has more number of stocks. It has 70 stocks instead of 10 or 20 stocks. However, that's not been true in last 3 years. So it's a long period. So I cannot tell you which one will do better, but we know what is the difference between the two. One is more diversified, better execution, lower slippage, and more pricing structures available. The second, which is the Gulaq part, is self-administered, so you have to be careful about how you execute. Um, it has concentrated bets, so when it works, it will work beautifully like it is doing right now. But it is more concentrated to help people invest with smaller amounts of money than our long alpha portfolio.
Perfect. I think two more questions on PMS, Sandeep, by Shivaji and Umesh. They're asking what are the charges for PMS and what is the difference between returns of PMS and Gulaq Year 6?
So charges, I will defer to you or Vivek if you guys are around. I know we have a couple of different variants, which is a combination of fixed fee and a fee on return over and above index. So there is a combination. You can choose your pricing when you become a PMS investor. For Gulaq Gear 6, as you know, we have a fixed fee for just model portfolio. It's not linked to AUM, it's not linked to performance. So those are the pricing difference. Sorry, what was the second part of the question? I thought there was second.
It was on the returns, Sandeep, of both the products.
Yeah, as I mentioned, the returns have been comparable, but long alpha over 3 years has produced slightly less returns than the Gulaq Gear 6. So Gulaq Gear 6 with its concentrated portfolio has done better. I think in aggregate, maybe 3-4% better a year over last 3 years.
Understood. And Shivaji, Umesh, if you both have further questions, please feel free to write to us and we will direct you to the relevant teams who can give you more details on the PMS product that we have. Then Khizar is asking, do you think money flow is shifting towards large cap?
It's not really visible. I mean, I was just looking at the small mid cap have been doing very well, and if we look at the attribution analysis as well, I think in general, under allocation to large cap, over allocation to mid and small has been a good bet against the index so far. Now, of course, these things are cyclical. At some point, it will change, but I haven't seen that till now.
Got it. Okay, I think two questions again, Sandeep, similar questions. People having 5 to 10 lakhs to invest, but they're waiting for the correction and they're very scared if this is a good time to put in all the money right now or stagger it a little. So your stance remains the same, I think.
The stance remains the same.
Yeah.
I think this fear causes a lot of people to sit out of the markets. I know a lot of people who took out all their money from stock market in COVID in March because it fell 20-30% in March of 2020 and they didn't want to go in. And they sat out the whole rally and big up growth during all of 2020 after March. So they ended up losing quite a bit of money. There is no way to predict the timing, so I cannot help you there. You have to overcome your fear. The only part is how much fear you can handle. If you can't handle fear with 10 lakhs, don't put 10 lakhs in the stock market. If you can handle fear with 20 lakhs, and you know it can go down 30-40%. So if you can handle fear with 2 lakhs, put 2 lakhs. Keep it there. Don't try to move it in and out. Put 8 lakhs in fixed income and be happy. This goal you have to know what market will do next, whether it will go up or down, we can't help you with. Right. There may be other people who promise they can do that. Good luck to them. We cannot help you with that problem.
Right. I hope this answers everyone's questions on this topic. They're just constantly asking. I think the market has gone beyond 20,000 and it's like a great feat. So everyone's just getting worried what to do.
Yes, I understand the feeling.
Yeah. Okay. Swapnil is saying, how can we track our own investments for Gulaq? I know Smallcase provides the charts for return, but we cannot relate our own investment with those charts. Personally, he's using Google Finance app to track. I'm not sure if I get the question correctly. Sandeep, did you understand the question? What he's trying to ask? Because
I
small.
think what he's saying is that Gulaq, what we see on small case versus what their actual return is may not be exactly the same, which is accurate. So I think your brokerage account should be able to do that, because your brokerage account should be showing you what you bought and what you sold at different times. So again, I haven't looked at different brokerage systems, but I know I use Interactive Brokers platform. I can see my returns right there with the exact prices at which I transacted. So
Right.
since your place of record is your brokerage account, that would be the best place to track it. Now, if you have other investments in the same account, yeah, I guess it will be difficult to know what is Gear 6 return versus other things. But if you had a single account, single investment, then that would be one way to do it.
Yeah, yeah. I think that problem can be solved by probably having two separate accounts. If you're an active trader, you want to monitor returns on your investments outside of Gulaq. And on the other part that you addressed, Sandeep, someone is saying that he or she has been investing for 1 year in year 6, and the platform shows 59% returns, whereas her actual returns are 22% in 1 year. Now, while we do see that there could be slippage and other transaction charges, this difference seems quite high. We might be able to help this person investigate
Yeah,
the reason.
absolutely. I would definitely be very willing to help investigate and, help them understand what are the sources of gap in terms of return. That's a very high slippage.
Yeah,
If you're seeing 37% slippage on 59% return, that's 60% slippage that you're getting on your return. That's too high. So please feel free, if you would give us your, brokerage statements or access to your brokerage statements. We will be happy to do the analysis, and we want to learn as well what our investor experiences are, and we are happy to help.
Right. So, please send us the email ID, as you all would know, support@gulak.com. I will also put it in the chat box towards the end of the session. Please send us all the details and we'll take this up. Khizar is asking what we will do if market faces huge falls consistently for 3 to 4 months. And by huge fall, he's saying 30% के around अगर हो जाता है, तो हम क्या करेंगे?
Same as what we do every month. We will continue to work with our systematic approach. 30% corrections have happened in the past. Even in 2022, there was a 20% reduction. We didn't change anything. It's the same model, same research process. And my recommendation to you would be, you also don't do anything, because sometimes doing more is not helpful.
Right. Sense. Okay, someone faced a technical glitch and had to delete the selling recommendations while rebalancing the portfolio because of some CDSL authorization issue. Okay, so in there you can write to Smallcase support, or you can write to Gulaq support, and we will connect you to Smallcase. This is the technical platform related query. So Smallcase would be able to take your issue and resolve it for you. You will be able to rebalance it properly. So please do reach out to us. And this is for everyone. If you face any issues related to Rebalance, you don't have to wait for the webinar. Just shoot an email to us and we'll be very happy to help. If it's needed that we connect you to Smallcase, happy to do that also. Vaibhav is asking us to share the constituents of Gulaq Gear 6. So Vaibhav, this is obviously a paid service, so you will have to subscribe. We have a whole team sitting working on this. So we do charge a small subscription fee for showing our investment advisory to our clients. So request you to check out the portfolios which are present on st.smallcase.com and subscribe to the one that most suits your risk appetite. Gosh, okay, we've addressed that question. Anyway, Inder is saying customer service said wait for next rebalance. No, that's Inder, please let us know customer service, because we have a customer care executive. Reach out to the customer care executive, send an email, and I personally will also look into your concern. Of course, you will be able to rebalance properly if you missed out some of the sell recommendations, we would want you to be able to execute those. So do reach out again, and I will also drop the phone number of the customer care line that we have. So you can shoot an email to us and I will check this particular case myself. Aniket is asking, what is slippage?
Aniket, slippage is when what price you expected when you did the analysis. In our case, we have a certain price at which we do the analysis and say this is a buy, this is a sell. And when you go to the market to buy or sell, if the price is different, then calculating the difference between the price you got and the price you expected is called slippage. Now, if the slippage is very high, normally what should happen is markets may go up, markets may go down. But if there was no impact of your individual investment, then generally there should be no slippage, because the ones that you sold, if the market went up, you missed some money, and the ones you bought, you paid I guess if the markets have gone up and you were buying, then you bought expensive, and anything that you sold became more expensive, so you make some money there, and they cancel each other out. So the market movement does not impact in absolute terms what you're implementing in terms of buying and selling, as long as you're buying and selling the same amount. But that's not what happens. What happens is sometimes what you're buying becomes more expensive and what you're selling becomes cheaper. So you lose money both ways. And that generally happens if a lot of people are trying to do the same thing that you're trying to do. So that is called slippage. And it has to be measured, it has to be controlled, and execution algorithms are developed, or execution methods are developed to allow you to implement your portfolio with less slippage. That's a whole big area that once you're investing very large amounts of money, that becomes a very important aspect.
Correct. Okay. Inder is asking if we can provide the functionality of limit orders to avoid slippage. I
think that would be a question for the brokers in Smallcase. In RIA, we are not the executing partner. So your broker is your executing partner. And what kind of services they provide is really something they need to develop. When we execute, for example, for PMS, we obviously only use limit orders. We never send market orders unless it's absolutely necessary, which is a very small part of what we do. But yeah, that's a big component of avoiding slippage.
Yes. Okay. Another thing, so I think people are just thinking of ways how they can avoid slippage, because Himanshu Patel is asking if he can get the stocks and their allocations a day before, so he could manually buy with limit orders to reduce slippage. Now,
so day before for you would be day before for everyone else, which is the same as the same day for everyone else.
Yeah. That's correct. Okay. A lot of repeating questions. A lot of repeating questions. Someone saying that as we're expecting more FIIs funds to flow in after election results, chances of this moving to a large cap is more. If that's the case, in coming months, we should increase some weightage to large cap.
Yes. So those kinds of, I call them fundamental overlays. That means you have a view of the market on what will happen, and you would like to see some implementation with that view. That's a very different approach for investment than systematic quant investments. Systematic quant investments do not come in with a view. They come in with what is visible in the data. How would something like this be visible in the data? We do track FII investment as one of our factors. So if we see when FII factors increase, large caps do well, and we start seeing FII flows increasing, then automatically we will adjust to large caps. But it will be balanced with everything else. We cannot just look at this one particular aspect and say, in aggregate, just do this. There may be other things going on. Maybe there is a lot of growth in this mid cap, small cap. Maybe there is a lot of demand from retail investors in India to go into smaller companies and they are pursuing that. Who knows how this balance is playing out? So we do not put any kind of an ad hoc overlay on our systematic approach to investment because we have a gut feeling that this may be okay. There is no way to test gut systematically. So if we have a hypothesis, we can test it over 15 years of data. If it works, we will be happy to adjust with the factor, but we won't be changing anything just because we have, some hypothesis that is popular as in the on TVs or on talk shows or things like that.
Right, thanks, Sandeep. Now, Rishabh का question था on Yes Bank and DHFL. So he's clarifying. He's saying कि Yes Bank DHFL crash कर गया था. वैसे portfolio तो नहीं बनाते आप. कुछ stocks में management issues होते हैं. So उसका आप क्या ध्यान रखते हैं?
Yes. So there are some indirect ways of doing that. जो management issue कई लोगों को किसी management का character या किसी management का एलिगेशन की उन्होंने कुछ घपला किया है, ये चीजें भी इंपॉर्टेंट होती हैं, पर ये चीजें सिस्टमैटिकली हम अपने मॉडल में एनालिस्ट रिपोर्ट्स के थ्रू ला सकते हैं. अगर उनके ऊपर जो कवरेज है, उन्होंने एनालिस्ट ने कोई उनके ऊपर टिप्पणी की है, कोई एनालिसिस की है, तो वो अवेलेबल होती है, तो हम उसको फैक्टर कर सकते हैं. दूसरी बात ये होती है कि ये सब चीजें मार्केट जो है वो एब्जॉर्ब करने लगता है. तो अगर किसी मैनेजमेंट में कोई दिक्कत है तो उनकी प्राइस के ऊपर इम्पैक्ट होना शुरू हो जाएगा. तो प्राइस फैक्टर से भी हमको पता लगने लग जाता है कि कुछ तो गड़बड़ है. अभी वो मैनेजमेंट की प्रॉब्लम है, बिजनेस की प्रॉब्लम है, रेगुलेटरी प्रॉब्लम है, कंपटीशन की प्रॉब्लम है, वो हमें नहीं पता और हमें फर्क भी नहीं पड़ता. पर हमें ये पता है कि मार्केट इस स्टॉक को अभी पसंद नहीं कर रहा है, तो वो हम उस चीज के अंदर इनकॉर्पोरेट करते हैं. तो इस तरीके से ये इंफॉर्मेशन हमारे मॉडल्स के अंदर अपने आप आ जाती है. हालांकि हम ओवरले नहीं करते हैं कि हमें लग रहा है कि ये मैनेजमेंट ठीक नहीं है, क्योंकि वो अगेन दैट्स अ फंडामेंटल व्यू, दैट्स अ डिफरेंट टाइप ऑफ इन्वेस्टमेंट. वो अलग तरीका है इन्वेस्ट करने का, जहां पे जो पोर्टफोलियो मैनेजर है उसका क्या ख्याल है, वो किस तरह से सोचता है, वो इंपॉर्टेंट होता है. हमारे सिस्टम में हमारे 15 साल का एनालिसिस, रिस्क, डेटा, ये चीजें क्या कहती हैं, ये इंपॉर्टेंट है. मुझे क्या अच्छा लगता है, मुझे क्या खराब लगता है, ईशा को क्या पसंद है, क्या खराब लगता है, इस चीज से खास फर्क नहीं पड़ता है जब तक कि वो 15 साल के डेटा पे सही नहीं उतरता.
Perfect. Okay, now Ravi is also clarifying his question. He had mentioned, I think someone had mentioned that certain stocks are have a premium of 3 to 5%. And now this is a clarification that they also noticed some stocks surged 3 to 5% in the week preceding the rebalance. So is this slippage or lag, and what's the solution?
No, that is not slippage. That is, it may be an contributing factor when we are looking at the model and we say, oh, this stock has momentum. That is probably going to make it more attractive. So it may be that the stocks that have momentum, that are doing well, which we want to be invested in, are showing up in our portfolio and also were going up in price in the recent past. So if momentum is the reason these stocks are in our portfolio, then they will show that characteristic that they went up and they showed up in our portfolio.
Right. I think a lot of people just assume that, oh, some stock went up, so it will now fall. Just like people are expecting Nifty has gone up, so there has to be a correction. It can't go up further. But that's not necessary. So our algos are analyzed.
It depends a lot on what is happening overall. If the earnings keep growing, if the business keeps growing. I mean, last GDP print was 7.5%. It is above expectation. So the economy is growing very nicely. If that continues to happen, stocks will perform well. Also, don't forget, the interest rates have been pretty high. And if the interest rates start moderating because the economy stabilizes, that also has a positive impact on stocks. So, एक बात आप समझ लीजिए कि अगर आप लोग टीवी या इंटरनेट पे चीजें देखते हैं, तो एक बुल को फॉलो कर लीजिए, एक बेयर को फॉलो कर लीजिए. आपको रोज 25 चीजें इस बात पे पता लग जाएंगी कि मार्केट ऊपर क्यों जाएगा, और 26 चीजें इस बात पे पता लग जाएंगी कि मार्केट नीचे क्यों जाएगा. अगर आप लोगों के पास इतनी कैपेबिलिटी है कि आप उसको एक डिसाइफर करके समझ सकते हैं कि ऊपर जाएगा कि नीचे जाएगा, तो कुछ इन्वेस्ट करने की जरूरत नहीं है, सिर्फ फ्यूचर्स में इन्वेस्ट कीजिए, यू विल मेक अ लॉट ऑफ मनी। पर ये आसान नहीं है। हम लोग बहुत रिसर्च करते हैं, हमारी टीम में 100 लोग हैं, वो सारा दिन यही सोचते हैं कि किस तरीके से इस चीज को समझा जाए कि मार्केट ऊपर जाएगा कि नीचे जाएगा। एंड इन एग्रीगेट ये चीज प्रिडिक्ट करना इम्पॉसिबल है, क्योंकि इतने सारे फैक्टर्स हैं। There's so many players who are expressing their opinion whether the market should be more or less valuable, that no one person can have that insight on what's going to happen tomorrow.
Right. Okay, I hope that answers your question, Ravi. Now, Jagdish is questioning on a weekly rebalance. Why can't we do that? For that also, we have some analysis that we've done.
Yeah, we have looked at that. So actually, we have looked at all the way to daily rebalance. We have looked at to from daily to annual. And roughly 2/3 of the alpha is preserved if we were to balance only on an annual basis, meaning we still will have good alpha if we were not rebalancing during the year. But two things. One, जो अभी हमारे पास, the 20 questions we have gotten, timing the market, how to, I think emotionally people cannot handle if we did not change our portfolio for 1 year. Can you imagine the number of questions we will get? How come you are still invested in this stock? It has already fallen 20%. How come you are doing this? So emotional stability is very important in the journey. So the balance that we have achieved or reached at is monthly is okay. Doing more would give us more alpha, but the slippage also will increase. We had so many questions of where people are trying to implement and they are not getting the right returns. Now, if we had to do it 4 times a month, that much more slippage will happen. So we have, for now, for this product, decided that monthly is sufficient. We are actually working to reduce the amount of trading that we suggest you do. And we have some research projects that are going to help reduce the amount of trading that we do. That's the direction we are going, not in the other direction. We don't think that we can give you enough benefit by doing more frequent adjustment. That's like day trading. And we cannot just make that recommendation and expect people to follow it in a systematic way. We are not trying to build a day trading advisory firm. We are trying to build long-term investment firm. We're trying to build firm for people who actually want to invest and grow their money over decades and many, many years. That's what our prime focus is. So whatever the product construct we'll come up with will be geared towards that mindset. How do we help people invest and stay invested and grow their savings over periods of time?
Okay. I think just a time check, Sandeep, you have another 10 minutes. We have few more questions that you have to be
I don't know. I'm happy to stay a few more minutes, but I think we've already been an hour, 15, 16 minutes. So
Right. So I'll just quickly take a few different type of questions. I see a few. One person is saying that he or she has two paid small cases, while one is asking to buy some stocks, the other asks to sell the same stocks. So how should he or she manage that for a 5 lakh rupee portfolio?
I don't think that should be happening. We would be happy to explore a little bit more. It's possible that your portfolio, depending on how much you invested, at what period of time, diverge in terms of where it is. But in a stable state, they have the same signal. But if your starting portfolio was larger or smaller in a particular portfolio, then it may be that you're building up to a certain amount. So again, please share with support@gulak.com. We will be happy to look at it. If there is anything peculiar, we'll come back to you. But that shouldn't be happening.
So Sandeep, I'm not sure if I understood the question correctly. I think the person is saying that they have two small cases. One is Gear 6 and one is of another manager. So
okay.
I think that's how I interpret the question.
If it is two different managers, of course, anything can be happening. Every stock that is bought, somebody is selling. Every stock that you sell, somebody is buying. So, of course, there will be buyers and sellers in the market. That's how market works.
So if this person has stocks from both the managers, recommendations of both the managers, I think it's okay to continue, because at a portfolio level, they may be including not just for returns, but also to balance the risk in that particular portfolio or in ours. So it's completely okay to continue if they like the returns and if they've analyzed both the portfolios returns and they're comfortable with both the portfolios.
And it doesn't mean that one manager or the other manager is better or worse just because of this fact. Because you are taking 30, 40 bets in terms of what is going to go up, what is going to go down. Some you'll get right, some you'll get wrong. It's the question is, in aggregate, overall, are you able to produce good returns?
Right. Okay. Sajid is asking if our PMS is discretionary or non-discretionary.
It is completely non-discretionary, and sometimes I get confused. Meaning, we take all the decisions. The investor doesn't take any decision. There's no overlay. You cannot select what to buy or sell based on recommendation. You give us your investment money to manage, and we make the decision on where to buy, where to sell.
Right. Dave is saying due to broker mandate of holding 20% as margin, he could rebalance only 80%. When he started to rebalance the next day with the 20%, the stocks had already moved up. So is there a way to manage this?
Unfortunately, not in this model portfolio structure. That is the requirement that regulator has in terms of having margins available before you transact. So that challenge would remain. That can be solved either in a PMS structure or a mutual fund structure, but not in a model portfolio structure.
Right. So Rajesh is asking, what are the cost-adjusted returns of Gulaq Year 6?
I think Smallcase does have a calculator that they provide where you can check against the pricing of your broker, what the cost of implementation those recommendations would be. So you can, depending on who you are transacting through and what pricing you have, you may be able to get that sense from that. Since we don't really track what platform you're using, how you are, what pricing you have with them, because every broker also has multiple pricing schemes. So your cost could vary quite a bit. And again, if you are in a full service broker paying on per transaction basis, big difference in what returns you see and what you will achieve, because that can be very expensive.
Right, right. So yeah, I think if you want to look at our returns of all the portfolios, st.smallcase.com or pickrite.in, you can log in. And Smallcase, for example, like Sandeep mentioned, cost adjusted returns, it shows on the cost calculator. So based on the broker with which you've logged into Smallcase, you will be able to see the returns and the charges associated, the brokerage charges as well as Gulaq charges on that portfolio. Govat saying, aren't you looking for some profit booking and keeping some cash ready for opportunities?
Gulaq Year 6 is a 100% equity portfolio. It stays 100% invested.
Okay. Someone asking us to inform the subscribers after every rebalance that how much PNL they have gained in these stocks which were sold. For the last month, I think we can show them the returns. In fact, that's also available on smallcase.com. The return the portfolio made in the last month. But for each individual, I think they'll be able to get it from their brokerage platform in the report section.
It depends on what transaction price you were able to achieve when you bought and when you sold. So your return will be somewhat different than what we are showing. And also you will have a trading cost based on your agreement with your broker. So that also we can't factor into what we show. So every individual's experience will be somewhat different.
A lot of people are thanking us, Sandeep, for answering all their questions, different compliments pouring in. So that's great. There are a few more questions. I'm just trying to skim through the ones that seem to be non-repetitive.
I will have to leave soon, I think.
Sure. So let me take just one last question and then we can wrap up. Okay, let me take this. Khizar says, sir, if your fan wants to meet you, then how and where could we meet? Interested to know your whole journey from childhood to till today.
Wow, that's a very different question. Yeah, we are happy to meet. We hold some investor meetups every now and then whenever I visit our office in Gurgaon. So yeah, again, if you have an interest in that, please reach out and we'd be happy to include you. Also, if you're more interested in either my journey or Gulak's journey or Estee's journey, we have been doing different kinds of webinars, interviews. Yeah, you can just Google my name. You'll see some different interviews and things I've done. But thank you for the question. Appreciate it.
Perfect. So I think, Sandeep, we can wrap up, and we'll be, for anyone whose question has not been answered, please write to us. We'll be happy to get back to you. And thank you so much for joining. Thanks a lot, Sandeep, for taking out time
Thank
on
you.
Tuesday morning.
Take care.
Thank you. Bye-bye, everyone. Have a good day.
Please do provide your feedback on language. Last time we got a lot of feedback on saying do some in Hindi. We tried to. Of course, there are some people who are comfortable with it, some who are not. We're trying to balance both. So if you have any feedback on that, please keep providing that and we'll try to adjust. Okay. Thank you. Bye-bye.
Thank you, Sandeep. Thanks, everyone.